Quick disclaimer, these discussions are intended for education and informative purposes. They are not to be used as legal advice.
Yeah, the One Big Beautiful Bill Act, and kind of the short name you call it. I've heard OBBBA, I've heard OB3, whatever you call it. There's some things that are going to raise some taxes on people that aren't expecting it, and there's going to be some things that are going to give some good benefits, but you just need to plan and be aware of it.
Welcome to the 256. I'm JD, host of the 256 Investor Podcast. This is for both the seasoned investor building a portfolio of rental properties that wants to sharpen their skills, and for the potential investor that needs to answer some questions and gain strategies to invest with confidence. We'll discuss all things investing, legal, tax planning, acquisitions, insurance, and of course, we'll discuss real-life experiences with 256 investors. Whether you live in the 256 or invest from afar, this is for you. Thanks, everybody, for tuning in again for another episode of the 256 Investor. We're here today with a special guest. This is Brad Garland from Honeycomb CPAs and Advisors. How you doing, Brad?
Pretty good this morning. Yeah,
it's good to see you. Known each other a long time. You're a local guy from Decatur, right? Grew up in Decatur?
Grew up in Decatur and then came a little closer to home, but not too close, in Huntsville, and kind of situated here now.
Yeah, you've been here practicing, what, 20? Somewhere around 20 years now? 15, 20 years. Mm-hmm. Moved around a little bit. You were the founder and partner of Honeycomb. Tell us a little bit about your business.
Mm-hmm. So Honeycomb CPAs and Advisors, it's a accounting firm. We're our Huntsville location's in Campus 805. I like to say we're the most boring business there. We're situated between a couple of breweries, a dance studio, a tattoo parlor, ping pong, Magic the Gathering, and then accountants. But it makes it so that if there's ever a meeting or good or bad tax news, we got somewhere to go.
Well, you're not the life of the party, but you might be the most important company.
Yeah, we're the one that keeps everything running.
Yeah, I saw you had a recent interview with Forbes. I think that was published online, and that's the funniest thing I saw. You know, they said, "Where are you?" And you said, "I'm in a historic school turned multi-use space above a brewery, below a tattoo studio, next to a ping pong facility." So that's what I got from your interview. Is that little piece? No, I'm just kidding. Yeah. So we'll kind of get right into things and talk about how real estate investors and business owners, because every investor is a business owner in a way, and we'll talk about some tax strategies they might go through. We'll discuss a little bit about 1031 tax deferred exchanges, but let's start with the big beautiful bill that was just passed. And I know you've been studying up on this, and you've probably had a lot of questions. So go ahead and tune us in as to the major things in that bill.
Yeah, the One Big Beautiful Bill Act, and kind of the short name you call it. I've heard OBBBA, I've heard OB3, whatever you call it. There's a lot of tax provisions in there that, you know, the headlines and kind of the sound bites grab some things, but it's a very big bill, and there's a lot of stuff in there. And there's a lot of stuff that I think people are going to be caught off guard by. It just means, you know, you want to make sure and contact your professional and learn more. But, you know, there's some things that are going to raise some taxes on people that aren't expecting it. And there's going to be some things that are going to give some good benefits, but you just need to plan and be aware of it. Because if you go into it and you don't do some kind of planning around it, or, you know, talk to your professional, you may just not be in the right kind of setup so that you're able to take advantage of those things. But just something that this coming tax season we're going to be facing, all the changes from that. Also, you know, the commissioner for the IRS that just got replaced, and that's going to create some more delays. So just in general, kind of what we're gearing up for is going to be a very harried or difficult tax season between the new tax law with some big changes, and then maybe some delays in implementing some things because there's an acting commissioner, but, you know, no one there right now as of this filming. So maybe some of these answers will get shored up soon, but we'll have to kind of wait and see.
Well, when was the last time there wasn't some havoc or questions going into tax season?
Yeah, every year there's something. Last year was a little calmer, but, you know, between 2017 and I think 2023, there were multiple kind of larger bills that were kind of had to be digested and planned for and planned around. And another challenge is when something happens late in the year, maybe the, you know, tax bill or something gets renewed or extended or changed in December. You know, if it's for that coming year, you couldn't have done, or for that year in progress, it's tough to do planning. So this being done middle of the year is better, but still means we want to get the right information and the right kind of definitions in place, and that information on the right people.
Right. And there's some things in the bill that really don't affect us any different than it would anybody else. There's things about the standard deduction limits for single, married, filing jointly, and there's some other things like that. But when we get into real estate investors and business owners, there are some things about bonus depreciation, Section 179. What is in there that could be beneficial? I know when we start talking about PP&E, plants, property, and equipment, that may not affect the small business owner, especially in real estate. But what are some things that we could utilize as investors, business owners?
So for a lot of business owners, they're going to see the advantage of the return of 100% bonus. That's a big change and of course, a lot of it depends on your setup and what you've got. But that was starting to be phased out, kind of turned back down to a lower rate. But with this new, the OB3, 100% bonus is back on the table. So that's going to be a big opportunity here, especially as we approach the end of the year, to figure out what investments you may want to make, what kind of purchases you want to make before you hit 12/31, so that you can get those tax advantages right away versus if you wait and do that in January 1st, that's a whole different tax year. So for 2025 tax year, making sure that what's in place and the timing of it, and it's what's so critical for a lot of these things.
Yeah, and we're talking about personal property use in your trade or business. What kind of exclusions are there, or limitations, or are there any in this bill, or that might further strengthen or limit what was previously there?
For the depreciation.
Yeah, right. Bonus depreciation.
For accelerated depreciation, it did bring back the 100%, and it kind of expanded that for what had already been expanded. The definition or application of some of the accelerated depreciation did change with some earlier bills, and so that means that now that we're seeing this kind of become a return to that 100%. One thing to note is in some of these things, you may see something referred to as permanent, and that just means that some of these tax provisions are, have a timer. They're set to expire on this date or whatever, but often they get extended. So one of those things you might see is, some accelerated depreciation, some other rate changes, but being made permanent doesn't mean it can't go away. It just means that every year or every however many years, you're not having to go back and have Congress or whatever kind of group of legislation agree on this. It just means that until it changes next time, that's permanent, and it's not going to be something you got to did they renew it in time this year? Because that's happened in the past where something may be expected to get renewed and doesn't, or something does get renewed and it's not expected to. It just makes planning hopefully a little easier, but again, nothing is permanent, meaning it can't be changed or undone with something later on.
Right. And we talk about this accelerated depreciation. We are talking about business property. So it's not affected by your personal income. There's no limits or phase out limits and things like that. This is a totally separate thing that's related to your business, or your Schedule C, or I guess Schedule E, real estate.
Yeah, Schedule C, Schedule E. The main thing to keep in mind with Schedule E, and especially, if you've got a couple of rentals and this is more passive, you just want to make sure you're familiar with those passive activity limitations, meaning, if you have some sort of passive activity, you're not going to necessarily get to offset that whole deduction or credits or whatever that may generate if you don't have passive income. You want to make sure those sync up. And there's tons of different rules and stipulations that come into that, but you've seen before in other situations where someone's like, I've got a new passive activity, I'm going to get all these write-offs, and they're limited. There's going to be something that means that you're not able to take it now. You have to defer it to a later year. It'll carry over, but it's something where planning-wise, you want to make sure that you've got income lining up with a deduction sometimes.
Right. Same thing with the Schedule C, which would be non-real estate passive. That would be maybe a realtor might utilize that. A real estate agent might utilize a Schedule C for some generic income and operating expenses of their business apart from a real estate.
Yeah, for Schedule C, typically it's going to be considered active, and it depends on kind of your amount of time spent, your role in that, if you have another kind of activity going on. But in general, Schedule C, you're not going to have those same limitations. But keep in mind the same IRS rule that's always applied, where you do have to have a show a profit for your business, a certain number of years. Otherwise, the IRS can, you risk the IRS classifying as a hobby, which can greatly limit some of the deductions that you might get otherwise. Right,
which you get with a lot of Schedule F farm income, right? I think that's the one where everybody claims a loss, and in the end it's kind of just a fun activity they're running. They just want to purchase some four-wheelers and have fun on their land.
Yeah, well, and a lot of times you'll see something on social media, you'll see, most people in a certain given time frame are like, hey, I'm going to do this because I heard this is a deduction. Like, where's this coming from? And social media driven, but it just means that there are going to be instances where it does apply, but there's many instances where it won't, or it's limited, or it's just not as good as you hear it, and you want to be sure that someone has a full understanding of what that might be.
Right. Well, covering a few other things in the new bill, interest deduction on automobiles is one that have we ever seen that? I don't remember seeing that in the time that I've been studying.
Yeah, it actually is an older one. No, it actually is an older one where I don't even remember how many years ago, but not in the time I was practicing, but there were some certain allowed deductions for vehicle interest or consumer interest. And again, I'm not familiar with those older rules, but it does mean that for this year, interest paid on a new vehicle that's domestic can be deductible. Now, the tax savings there, it's one of those things where you don't want to, I'm going to go buy a new vehicle and incur all this interest and I'll get a big tax write-off. You want to make sure you're not letting the tail wag the dog, where you do get a deduction, but it's something that, in this case is often going to be more, hey, that's a benefit. And, that might not be one that influences your decision. If you're buying a vehicle for business, that's not really what we're talking about here. This is just if it's a personal vehicle that you're paying interest on for a car loan.
Right. And which a lot of people do. Like if you're in the profession I'm in, you use your personal vehicle for a ton of business use. Calculate your mileage. We'll talk about that really briefly. What are the different ways to claim a mileage expense?
Tracking mileage is what's important there. Excuse me. Tracking mileage is what's important there. I recommend using an app. There's lots of apps that, when you have your phone, it'll automatically track where you're going. And then at the end of the week or end of a month or whatever, you can just swipe right, swipe left and say whether it's business or personal. But the mileage deduction is so good because it not only factors in just wear and tear on the vehicle, but also fuel costs and all the other upkeep costs that go with it. Otherwise, you might be tracking actuals, but that's just a lot more paperwork or tracking that might be involved. And in general, you still want to track miles just so that you can prove business, function, business use. So that's where mileage can be just a bigger savings, especially for a business or like a realtor, where there's a lot of driving involved. Anything that you're not doing for the benefit, for your own, but you're doing this for the business, has a business purpose, that's absolutely deductible and something you want to track. There can be instances where a taxpayer is like, oh, I'm going to estimate it. And you definitely want to have that be a concurrent live record, follow all the IRS rules. But that's where an app does a lot of that for you. And you're not having to worry about, keeping a handwritten journal. Some people are good at it. I'm not. It's much easier for me to just let the app track it. And then you can go in there and categorize business versus personal, at the end of a week, on Sunday watching football, versus trying to track have a pen and paper and keep a journal in your glove box.
Yeah, and I think the best way to do it is just track all your expenses, give it to your accountant, and say what's going to be most beneficial here.
Yeah, there's so many new softwares that can help you track some of the receipts and mileage, and it makes it easier for the business owner, for the entrepreneur, but also makes it easier for them to hand that over to the accountant. I no longer want to see shoe boxes of receipts, or I got a grocery bag full of receipts and check stubs one time. Like, that's not the technological way to do it. There's so many good software solutions that can handle that and make it easier for everybody involved. And especially, again, does the business owner need it? Yes. Does the accountant need it? Yes. But really, why are we tracking this? That's so that if IRS, if Alabama Department of Revenue, or even depending on what it is, Department of Labor or whatever, if they want these records, they're easily accessible via software. A digital copy for most instances is going to be totally good. Not like you have to keep that paper. And often those receipts now, the heat printed ones, they fade to white over time. So if you're like, oh, I've got the receipt, it's from 2 years ago, and you go to grab it and it's just turned, bleach white over time, a digital copy won't do that. So it's just making sure you've got good record keeping for your business so that you can make, your tax return happy, the accountant happy, and ultimately the agency happy if there's any questions.
Right. What forms of software do you recommend for just an average a client of yours who's going to bring you everything at the end of the year for a tax return? What do you recommend as a way for them to track all this?
So for mileage, MileIQ is a popular one. It's kind of like the best overall solution for just mileage. There's a lot of receipt tracking apps. Dex is one. QuickBooks is one. And QuickBooks is a solution where it does a lot of things. Sometimes it doesn't do them as well as a specific app for that. But, if you're only doing something part-time or, there's low volume of activity, that might be sufficient. If there's one where, hey, there's a lot of receipts or, you travel all over the place and you're using multiple vehicles, that's when it might be good to specialize with a specific software solution.
Yeah, there's QuickBooks, Quicken. I
Yeah,
don't.
there's Wave, ZipBooks, FreshBooks, Zero with an X. There's a lot of good alternatives to QuickBooks. It's become the big answer, or the big, kind of solution that a lot of people use. But again, depending on your specific circumstance or what your accountant's preference is, it may be better off using, some different solution than kind of the standard go-to for everybody.
Yeah, there might be a more tailored fit for one person than another. So again, a conversation to have with your accountant. When it comes to just personal finance stuff, what do you recommend? How does somebody keep up with everything, not just their business and their real estate, their passive income, but just in general, keeping a grasp on their budget? Is there anything you recommend that helps someone? Is there an app, or is there, again, a website that may be free or by pay for subscription? Is there something you recommend just for everybody, every taxpayer to use?
Yeah, so me personally, and it's overkill, but because I'm in it so much, I use QuickBooks for myself. It's not one I'd recommend for your standard kind of individual consumer. There's one called You Need a Budget, YNAB, and that's one that's good for tracking personal expenses. It does budgets. It can help you even track receipts. Quicken is also one, and that's from the same people as QuickBooks. Intuit owns it. A lot of those that are now free, they do it's a freemium where they come with some advertising and, hey, we notice you're paying this or going here, and let's have an ad that serves that. So that's something to keep in mind. That can kind of be discouraging to see that kind of use of data, but that is what it is. A lot of good paid solutions that are out there, which might be a little more closed up, and there's also going to be some solutions which can give you more guidance than just, hey, we're tracking things, but more proactive of, hey, we want to put some budgets in place, do some strategic saving, strategic spending, whatever, to give you some good options there. But I do recommend doing that. It's one of the rules where what you measure is what you kind of watch, or what you watch is what you measure. And same thing where your personal finances, just like business, activity and business finances, if you can track it and know where your money is going personally, then you can kind of say, all right, well, we're spending a lot here, or we need to cut back here, or even, spend more here. There's a kind of a move here where, as you're able to kind of focus more on not being cheap, maybe being frugal, but not being cheap. And that means, hey, spend more here, especially as income goes up, you've got the ability the wealth to have this spend, so that you personally, your friends, your family, whatever, are enjoying the benefits of that, which is why we're all doing what we're doing. That has a big impact on just, personal lifestyle, whatever you want to call it.
Right. I know Mint was a popular one, which I think got absorbed by Intuit.
Yes, somebody bought Mint. I don't remember off the top of my head.
So I don't think it's I used it briefly once. I didn't really like it, but I know it was one of the more popular platforms to track your spending and budgets and stuff like that. Empower, which is formerly Personal Financial, is another good one. But you're right. When you sign up for any free service, you are going to get advertisements. Let's schedule a consultation with a wealth advisor. People have your information when you sign up for these things. Nothing's really free, but I do recommend that everybody utilize some sort of platform. Or for all our engineers here, they might just want to develop a extended spreadsheet to track all this. But everybody should be in control of this. And I'll tell you one thing that's a problem these days, and I don't know how to fix it. Maybe you can tell us here, but nobody balances a checkbook. I mean, nobody uses a checkbook anymore. We call it a check register. And I can't tell you how many payments to us get returned. And they say, well, I looked on my online banking and it said I had the money when I gave you the check. And it's like, oh, it's just not as simple as that. There's a thing called outstanding checks and deposits that haven't cleared and all this stuff. And I don't know if there's an easy answer for this. Nobody's taught this anymore. Unless you go through business school, accounting like we did, nobody's learning this stuff. How in the world do we fix this? This is a big problem.
Yeah. Well, personal finance is one where as it's kind of gotten more complicated, but also with the kind of really not even advent, but just widespread usage where, hey, we're cashless, we only take, credit card, debit card, whatever. People are more easily able to spend the money, but then are they going back and, reconciling their personal account, or at least keeping a bank register so they know, hey, there's a check outstanding, or, I paid someone via Venmo, it hadn't cleared yet, whatever. That's something that people need to know. And, my grandfather was actually an accountant, and I remember, he, even in his older age, he would keep that check register balance to the penny. And hey, I can't find this, what's going on here? Why is this off by 10 cents, a dollar, whatever? And so it just means that, having that skill set so that you continue to monitor your personal finances by keeping the check register clean, watching all the credit card statements, because something that's kind of prevalent now is, you sign up for this subscription, and you sign up for this service, and you sign up for this little gym membership, and they're only dinging you $5, $10, $20 a month, but that adds up over time. And if you're not using the services, or you've forgotten that you're using the services, and you're going through your credit card statement or your bank register to realize it, that can add up. So, yeah, we're talking about tax savings, but it also just means on the personal side, making sure that, hey, we're still paying for Hulu or whatever. I've got a MySpace premium subscription I forgot about from 20 years ago, and I'm still paying for it. Are we tracking that? Are we monitoring what that is?
Yeah. And I think auto draft from a bank account is the way to go for these companies, because nobody's checking. They just check to see, do I have the money in there right now to make this purchase? And so many people are maxed on their credit cards. That's no longer an option. They swipe and it doesn't go through because they're maxed out. So they're going back to using a debit card or writing a personal check, and then they really get in trouble because they have no idea what's actually in their account because they haven't reconciled anything.
And that's something I see businesses do a lot, and I like to call it checkbook accounting, where, hey, how's the business doing? Checkbook has money, we're good. But it's more about knowing from a business standpoint, the bookkeeping, that, hey, we know these bills are coming up, these are in process, this revenue's coming in, or this transfer is occurring, and not just saying, hey, there's money in the checkbook, but hey, yeah, for this week, this month, whatever, we've got money coming in, we've got enough money to cover expenses, we've got savings, and all that applies personally as well, which, you're able to track, and hey, we've got some an emergency fund or other savings or something that that you may have enough money for, the checkbook for your household for that month or that week. But beyond just, hey, is there enough money coming in? Do we have too many expenses going out? Are there things that we're not aware of that we're being charged for, that we just stop tracking, we don't see it, it doesn't show up in the checkbook, may be hidden in a credit card, but that's not being monitored as heavily. So something to be very cognizant of.
Yeah. What are your thoughts on utilizing software that's available to any consumer for a tax return? I haven't used those in, 20, 25 years. I couldn't even tell you what they are now. As opposed to having a CPA. What have you noticed when people come to you and they say, I've been using TurboTax or something online, that was $15 to file? I'm sure they're missing a lot of things, because you can't tell me somebody with a complicated return that has a Schedule E and a Schedule C and Schedule D and everything like that. There's no way these things are being calculated properly, and I can't imagine they're getting any advice.
Yeah, it's a lack of advice and a lack of planning that can often hurt a consumer that may need a higher level tax preparation support. If they're Schedule E, if they have this rental activity, there's many instances where, depreciation is always one that comes up, where is that being tracked properly? And there's a process. If you go to sell a home and for the tax return, maybe depreciation hasn't been taken, you've got to go back and either amend prior years, or you can do some sort of accounting adjustment. But it's not something the IRS will just say, oh, well, you forgot to take it, no harm, no foul. It's something that's got to be corrected. On Schedule D with investments, different, equity investments, it still can mean that, this 1099 may show this, but is that what's accurate for the return? Stock options are a big one, where the 1099 may show one thing, but the reality, the actual tax result, is much lower. But if that's not something that the, person is aware of, it may not be tracked properly or reported properly, and there can be more tax paid. Or if it's improperly done and the IRS or Alabama catch it later, it can result in more taxes being due, plus penalty, plus interest. And there's instances where people may not want to pay some of the estimated payments when something's due, or make some other adjustments. But often penalty is burning money. You're just sending money to Montgomery or DC or whatever, where it may not be the case if there were planning in place. Now, if we're only talking $10 in savings, is that going to be worth, engaging a professional? No, but these can be cases where we're talking tens of thousands of dollars of savings, or at least planning that goes into place, so that on the investment side, on the accounting side, tax side, planning can result in some real world dollars being saved.
Yeah, and I think it's just a lack of planning and not having a clear focus. If you're going this online route with just because it's a cheap way to file a tax return, or you're avoiding paying a CPA some fees. I just think it's a complete lack of direction and unknowing of your future.
Yeah, well, and the do-it-yourself method, it's something where the example I like to give is I used to mow my own lawn, had a lawnmower. I wasn't good at it. It took me forever to do. And, I would spend like half my Saturday when I could be spending that time with family, or if it was busy season, maybe doing some work. But instead, I'd be out there, pushing the mower in the heat, or in the, rain, if it's starting to rain, whatever. But by hiring a lawn care professional to do that instead, I'm able to free up my time. It's done better. They spend a lot less time doing it than I do, but they've got better tools and equipment. And it's the same when you're hiring any professional, accounting, financial, whatever that need is. If it's not something you enjoy doing and not something that you're really skilled at doing, engaging a professional can be a great way to say, hey, I'm going to turn my money into some time that I can get back and do something else, whether that's, hey, working on the business if you're an entrepreneur, or spending time with family, vacation, reading, whatever, anything beyond just trying to save a few bucks here and there and doing it yourself, which, again, if you love it and are good at it, go for it. But otherwise, there's many professionals, that, are able to help instead.
Right. Yeah, I can change my own truck's oil, and I did it for 15 years, but I hate it every time. It's a 2-hour job for me. I don't want to do it. I can take it to a mechanic who can put on a lift and change it in 10 minutes, and I don't have to go dispose of the oil and all this stuff. Can I do it? Sure. Is it the best use of my time? Absolutely not. No, exactly. And a lot of people refuse to give those things up. I think at some point you just got to cut the things that you're not an expert at and that you don't love and that aren't going to really progress you in what's going to earn you money. Yeah. Me changing my oil, that's not earning me any money. I could go out and I could identify my next rental property in the time that I've spent doing that kind of stuff. So.
Yeah, not wasting a Saturday or
right.
Losing time on a Sunday. Take back the weekend and engage professionals, and that is really, if you're encouraging others to engage professionals, it's the same thing. You should be doing the same.
Yeah, we're going to get into one thing that we recently had a long deep dive into the 1031 tax deferred exchange, and we had a legal expert. He's an attorney with IPX for a 2-part series, and we really discussed everything related to the 1031 exchange. But he mentioned multiple times, I'm not an accountant, I'm an attorney. You need to engage with a CPA before you make these moves. So I do want to get your thoughts, just from an accountant's perspective, of the 1031 tax deferred exchange, like-kind exchange, something that you might have identified that's different than one attorney facilitating the transaction. And when I mean attorney, they're normally a QI, qualified intermediary, who's holding the money to facilitate the deal. But they'll all tell you, I'm not an accountant. You need to consult with an accountant. So what are some maybe drawbacks or some do's and don'ts that you've noticed over the years associated with 1031s?
Yeah, 1031 exchanges can be a great way to really cut your taxes because you're able to defer some of these gains. And really, with the way this area has grown so much and values have gone up, many 1031 exchanges can be good tax saving maneuvers. But from an overall perspective, it means do engage with your tax professional, because a little bit of planning, again, like we talked about earlier, can go a long way. Where at a certain point, it doesn't make sense, depending on the rest of your tax circumstances, to forego a 1031, recognize some of the gain, go ahead and pay some of the taxes, and kind of capture that there. Or again, if you know that, hey, in a couple of years, your tax situation is going to change and it's going to increase, or if you're thinking that certain tax laws may change, how do you plan around that? There's the 1031 exchanges. There was a recent change in 2017. It really limited some of what it can be done, but the current landscape means that you want to use that intermediary, that professional, to help you with some of the planning around that. And one of the things I've seen with people used to the old rules is that kind of after the fact, hey, I just sold something, I want to do a 1031 exchange now. It's like, that's when you want to engage a professional, the intermediary, well beforehand. Make sure you're familiar with all the tax rules around time frames and everything else, because nothing can be worse than thinking you're going to get this tax benefit that you heard about a while ago, and you might have even done last time, but the rules changed on you and it just wasn't something you were familiar with. And suddenly you're caught off guard by, oh, well, now the rules are this and you got to follow these steps instead. And you're kind of unexpectedly presented with some tax in your future there.
Right. And you referenced 2017. I think some forms of personal property like art and collectibles could be exchanged, but that was eliminated, 8 years ago or so.
Yeah, really
So
put the focus on real estate.
it is really, it's just limited to real property now. And there are some funky rules about a very small percentage might maybe be personal property, but again, you'll want to consult with people before going that route. I've never seen that as part of the deal. I think it's incredibly rare and such limitations that it really doesn't apply to many people. But the tax deferred exchange has been around for like 100 years or more in our country. But in the early 90s, the idea of the qualified intermediary was either introduced or became common to use and actually required to use. So for the last 30 plus years, I think things have gone probably a lot smoother than they did in the past when people were conducting this by themselves and then trying to claim such on their tax returns
After the fact,
and
basically.
just a total mess. So now with the idea of the qualified intermediary holding the money to facilitate the exchange, things seem to go a lot smoother. Is that kind of what you've noticed in your time working with these?
Yeah, and a lot of it just, again, is around planning and running different scenarios or projections where you say, hey, I've talked to an intermediary, I've got these, this property or these potential properties picked out, let's run some projections and see, hey, what happens if we do a 1031 exchange, if we don't, if we do this instead, and taking a look at all those, scenario A, B, C, and what makes the most sense. And even not only looking at what that might mean a year from now or 2 years from now, but, maybe in a 5-year window, or it depends on all the different life circumstances, what income might look like, what your other investment plans are, and coming up with a good game plan.
Yeah. Another thing I'd recommend, every client talk to their accountant about how to form a business or whether to form a business. If they're holding real estate, do we just do a Schedule E, or do we form a partnership or a single member LLC? I know there's a ton of different scenarios, but I just say everybody needs to consult with their accountant. We've had attorneys on here who've talked about the legal ways to form these businesses, but what's your quick take on that? Just a consultation because everybody's different?
Yeah, I mean, a consultation can be good, but also are always in concert with an attorney, just making sure that the legal and liability aspects of this are addressed, and even sometimes an insurance agent, because there can be scenarios where if someone's maybe getting one property, you look at the pros and cons of, hey, do we need legal structure? What if we get a really, high-end insurance policy? Tons of different things to look at from a non-tax perspective. As far as, entity structure goes, sometimes folks will say, hey, I'm going to form an LLC and generate some tax savings. And, forming an LLC on its own doesn't generate tax savings right there. It's about what else is going on. What's the type and structure of the business? Is there any discussion of, S corporation, C corporation, all these different things that come into play, which again, you don't want to get overcomplicated for a simple situation. And I've heard a couple of instances of this here recently, so I don't know if it's, again, something on social media, but there's been a few cases I've seen, not necessarily of clients of mine, but where a person has been approached by this, very sophisticated, fancy investment legal structure that you can set up a C corporation and have, trust or estates involved. And the setup fees for that are very expensive. The consultation fees for that are very expensive. And they often come then to the tax preparer and say, all right, I got all this set up. I've heard this now will save me a ton of taxes. And, if you're talking, even a handful of rental properties or whatever else may be involved, there's minimal savings, and you're saving $10 in taxes, but you've made your compliance costs go up, by $10,000. And I guess people aren't doing enough of the proper research or not consulting with the right folks to kind of get a good overall answer to, hey, is this the right structure for me? So I definitely encourage you, if you found some kind of video online or some sort of, quick ad that sold you these amazing tax savings on investments, make sure you talk to someone locally and not just someone online that can really sit down and discuss what that setup may be, because you just don't want to go down the wrong path. Even if you set it up and you decide you want to go simpler, there's cost to unwinding or, changing some of that around. So even if you catch the error, but you've already paid a consultant for setup or whatever, changing that can be just as expensive to kind of unwind some of the complexity there.
Yeah, the exit cost can be something that nobody ever calculates. And this leads me into the last thing I want to discuss with you, the importance of having a good network around you as a business owner, as an investor. I know you understand this. You're the founder of a BNI chapter in North Alabama, right? Accelerate, BNI. So that's all about, is networking. And almost everybody I've had on here, I've discussed the importance of having a good team around you, an attorney, an accountant, a pest control person for me. I mean, I've got, in real estate, I've got lenders, insurance people. How important is that? Like you said, they can speak to legal people and others about forming businesses and these great plans, but if they fail to talk with the accountant, it could be a grave mistake.
Yeah. When I moved back to the Huntsville area, there was actually the opportunity for kind of a fixer-upper home that, was in a good area and looked interesting, but it was one of those things where I didn't know, I don't have that skill set myself to kind of do some repairs and remodeling. And I didn't know the connections, who could I just call out of the blue and trust, with, hey, I need, flooring redone and drywall, whatever, all these things that I have no idea about. I didn't know who to call. And so the same goes when you're starting a business or just running a business. As your business grows, if you're doing investments, whatever that may be, who do you call? And so if you have a network of people that you can rely on, even if you just know one accountant, but then you're like, hey, accountant, I need to know a banker and a financial planner, or I need to know an insurance agent, that one point can connect you with other people as well, so that you're able to not just be kind of wandering out there in the wilderness on Google search or whatever, but actually working with some local folks that are established, that have a good reputation and are well known in the area, so that, hey, we need payroll changes, or we need bookkeeping set up, or we need, a new savings account set up and we want to have this on it, or a line of credit. You're able to know and connect with the people that are in your network, or if you're still establishing your network, other people in other networks that can connect you with someone local.
Yeah, and repeatable business within your network is so crucial. I know so many people, especially in real estate investing, who, if they meet a CPA who's $100 cheaper, they go, oh, I'm making that move. That makes all the sense in the world. I'm like, you're starting over a brand new relationship. Cheaper doesn't mean better, number one. I think keeping that network intact the best you can, not that there won't be changes from time to time and replacing parts of that team, but retaining that network is so crucial to me. And I think so many people miss that because they're so fixated on just the price of what somebody offers. There's way more to it than that.
Yeah, there's a popular phrase on, I think it's on tax Twitter or Reddit, but it's like, there's nothing more expensive than cheap accounting. And it just means that, hey, yeah, you can find someone that'll do it for less, but is that going to be a good product? And that applies to so many different industries and professions, where you can always get something for less than what you're paying for now. But if you got someone, a professional that you know, like, and trust, and have a relationship with them and the relationship with the network, that is valuable in and of itself.
Yeah, couldn't agree more. Brad, I really appreciate you coming on today with us, spending some time. Where can we reach you? What's the best way to stay in touch with what you're doing?
So you can find Honeycomb CPAs and Advisors online. Website is honeycomb.cpa. You can find us on social media at Honeycomb CPA. And then for kind of my professional Brad Garland CPA stuff, you can find me at Tax Poetic on some different channels, including YouTube, Instagram, and Twitter or X. And there's also an opportunity coming up for startup businesses and entrepreneurs. We're having a Saturday seminar that can give some good instruction on hey, if you're starting a new business, what does that mean from insurance, legal, accounting standpoint, marketing standpoint, all these different things that a small business may need to get started or to grow, even if they're already established. That's Saturday, September 6th, and I can give you a link as well that has some more information about that seminar.
Okay, appreciate that. And Brad's a great follow for anybody who's not following Brad. It's good advice. It's good stuff. I follow you regularly. Really appreciate you coming by once again. For Brad Garland and AVO Multimedia for recording and producing this show for us, I'm JD. My time's up. I thank you for yours. This podcast is proudly sponsored by 256 Realty, investors helping investors. Big thanks to our production team at AVO Multimedia Services for producing, editing, and providing the music that brings this podcast to life. If you enjoyed this episode, be sure to subscribe or follow the podcast on YouTube, Spotify, Apple Podcasts, or whatever you please. We'd love it if you'd leave a comment, review, and rating. It helps us grow and continue to bring you valuable content. And of course, investors love to share good knowledge. If you enjoyed this episode, please share it with a friend who's ready to level up their investment game. To catch more episodes and video content, visit our YouTube channel at 256investor. Want to get in touch? Visit our website at 256realty.com. We'd love to hear from you. Until next time, keep investing wisely, and we'll catch you in the next episode.